Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning, folks. Welcome to the Markets Wrap with me, Ryan Huang. And let's take a look at the markets right now, where we are seeing new highs. The S&P 500 squeezing out a gain of 0.1%, breaking above 6,300 points for the first time. We've got a Nasdaq Composite, also a new high, after jumping 0.4%. And we've got a Dow Jones Industrial Average just slightly underwater by 0.04% at 44,323. All right, let's break it all down with Christine Short. She is the Vice President of Research at Wall Street Horizon. Christine, how are you doing today?
I'm doing very well. Thanks so much for having me.
Yeah, it's a great time, at least looking at how markets are playing out right now. So we've got earnings underway, of course. We'll get into that in a few moments. What do you take away from the latest session, where we've got markets just pricing in quite a bit of optimism?
Yeah, you're right. I mean, it's incredible to think just a little over a week ago we had some new tariff proposals on the table. Last weekend, President Trump proposed higher tariffs for Brazil, Canada, EU, Mexico, and we're just seeing now the markets are sort of insensitive to that sort of news at this point, right? Because you just mentioned we've hit a all-time high now, first close above 6,300 for the S&P. NASDAQ hit another record, and this has all just happened in the last week. And, you know, just a few months ago, a quarter ago, that kind of news really would have rattled markets. But I think we're in wait-and-see mode now, because a lot of these tariff policies haven't come to fruition, or they've changed, negotiations have been reached, and we are just, like you said, getting into the swing of earnings season. And I think investors really want to hear from U.S. corporations. Yeah,
lots to hear and watch out for when they do provide their commentaries. I'm wondering as well, how is the softer U.S. dollar being priced into all of this? Because to some extent, if you have a softer dollar, you do get earnings being boosted to some extent with some of these multinationals.
Yeah, you're right. The exchange rate will certainly impact that. Although we've seen, U.S. dollars strengthen or remain fairly strong over the past week or so, especially in the face of, some of the reports about our Federal Reserve Chair, Jerome Powell, potentially being dismissed early, which we know would shatter currency markets. And I think that the fact that, major developed economy currencies weakened against the dollar last week just says that, many investors or the large, currencies, the largest market in the world, see the little chance of the premature end of Chair Powell's tenure. But you're right, when you translate foreign exchange rate back into earnings, that certainly comes into play, but it hasn't been something mentioned. We've got about 62 companies reporting so far in the S&P 500, and it hasn't been mentioned as a negative thus far for many of those.
Yeah, let's get that out of the way with the earnings so far from central banks. Let's move on to the banks per se. So far, it's a bit of a good start of sorts, mostly positive if you look at the earnings. What are you seeing in terms of what they are forecasting in the coming days, their outlook for where business is going?
Yeah, it's been a great kickoff, as you said, starting with the big U.S. banks last week. Really impressive results. A lot of that was due to strength in trading, both on the equity side as well as fixed income currency and commodities, because we did, start out the quarter with pretty volatile markets back in April. That certainly continued to help fuel trading revenue. Net interest income was a little bit of a weak spot if you look at certain banks like Bank of America and Wells Fargo, but was enough to be offset by stronger trading revenue, as well as investment banking activity. We haven't seen a ton of deal making, certainly not in the first quarter, but it's starting to come back, and that was the prediction. 2025, will we start to see more IPOs? Will we start to see more M&A activity? And the banks told us, yes, there is that area is starting to rev up. We're seeing more activity there. And because we had those strong results, S&P 500 EPS growth shot up to 5.6%. Revenues are now expected to grow about 5% year over year. But what I think is most interesting is how many companies are beating expectations. And it is still early. Only 62% of S&P 500 names have reported, but 83% have beat on both the top and bottom line. That's better than the last year average, the 5-year average, the 10-year average. And it's especially impressive to me on the revenue front, because top line revenue beats have been kind of weak the last several quarters. We can always get a great bottom line number because we can do some accounting magic. We can reduce costs. We can buy back shares. We can do things to make EPS look better. But to show actual robust sales growth, I think is a positive as we start to kind of hit, the full swing of the Q2 earnings season, which starts to kick off this week.
Yeah, I think tech is in focus this week. What are you expecting from the tech names? And then is this sector defensive of sorts with what's going on around the world?
Yeah, it's funny. It has sort of become that, right? It's become this sort of safe haven of really high growth names. Like you said, we start to kick it off this week with a couple Magnificent 7 constituents. Tesla and Alphabet will be in focus when they report on Wednesday. The group as a whole is expected to grow about 14% year over year. If you take the 7 companies out of the S&P 500, the other 493 companies are only expecting growth of about 3.5%. So, yes, very much tech-driven, not as much as we saw maybe a year ago when the Mag 7 were a third of all S&P 500 growth, but still very strong leaders. But it's going to be a big test because half of those names are lagging the broader U.S. market coming into this earnings season. So Tesla's down 13%. Apple's down almost 13% year to date. Google's about flat. Amazon's up just 4%. If you compare that to the benchmark S&P 500, which is up 8%, those names, aren't quite doing as well. It's the names that are most highly levered to generative AI. So Microsoft, NVIDIA, Meta, they're showing that those tailwinds associated with investing and making those big gains in the AI space are really starting to pay off and, likely will make those names winners this quarter.
All right. One of the quotes, or at least the outlook from the likes of JP Morgan Chase CEO Jamie Dimon, he highlighted the health of the U.S. consumer, but he also raised concerns about where things are with trade and tariffs. So we are going to be taking closer towards the August 1st deadline. Are you going to be expecting any big moves as we head towards that deadline, especially when you see how we've seen that timeline being shifted and it can be kicked down the road? Are you looking at perhaps another taco trade?
Yeah, like I said, so far, investors have been a little insensitive to this because we've seen how it plays out, and a lot of these tariffs don't always come to fruition. I know the U.S. Commerce Secretary Howard Lutnick called the August 1st the hard deadline for countries to start paying tariffs, but then he also added that nothing stops countries from, talking to us after August 1st. So there's always a door kind of left open to these negotiations, or a door left open to kind of change policies. And it's right for the banks, and many of them, like you mentioned, JP Morgan, there's concern around them, right? What happens if they go through? We know that certainly impacts the U.S. consumer, and that was one of the kind of weak spots was credit quality in some of the bank reports. Delinquency rates on credit cards, consumers racking up debt, not able to pay it off within the 30 days. And the consumer has been softening both because of higher prices, and so it's really a test about whether they can pay higher prices, and certainly tariffs are something that many companies have said would get passed back on down to the consumer. So it is a concern. I think, like I said, investors are waiting to hear what more corporations say this earnings season and waiting for that August 1st deadline, which is, end of next week. We've still got a couple of weeks to see how that sort of plays out. But certainly if some of these went through, it would mean higher prices for consumer, and then you'd start to see, the consumers already started to cool, and I think you'd start to see them soften even more in light of those tariffs.
Some cautious optimism in the air as we wait for the earnings to come through. And we've been in conversation with Christine Short. She's the Vice President of Research for Wall Street Horizon. Christine, thanks for your time and insights this morning.
Thanks for having me. Great to be here.
Always great to have you on, Christine. Catch up with you again soon. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.